Hello guys, Gavin here. So, just to give you a market update, guys, this is, first of all, this is a webinar sponsored by M Trading. So M Trading is hosting this webinar and is allowing you to understand what is it like to become a trader and how do you go about taking your trades on a daily basis. Yep. So first things first, let's cover some of the fundamentals. So what has taken place? So one of the key points I would say is over the Asia Pacific countries, so we're looking at Australia, they kept their interest rates the same. So they've seen a slowdown in their economy. Therefore, they don't want to see, they don't want to hike their interest rates too quickly. So they kept this interest rate the same at 1.5%. That also had an impact on the Australian dollar obviously, and the Kiwi dollar and the yen. All three have been strengthening, have shown a lot of strength today. In the UK, so in the UK we had a Brexit update. So Theresa May on the 21st of September will be addressing some talks. She'll be hopefully will have more of a decisive measure and a plan implemented of Brexit negotiations that are taking place currently. Yep. And in the US, we have the House of Representatives who are poised to vote on the hurricane aid bill. There is that concern there. In addition to that, the concern they have with North Korea, that also has an impact within the markets. So yes, okay, so there is a lot of fundamentals. There is a lot of risk on to risk off scenario. So let me give you an idea of what risk on and risk off is. In the markets on a daily basis, you would measure whether is the market in a positive state or more of a vulnerable state. And we would call that a risk on, risk off. So we're trying to identify what the direction of the money flow is, whether it's going to more safe havens, such as risk off being gold, major currencies, so precious metals, fixed income, which are bonds, and major currencies such as the dollar, yen, euro, sterling, Swiss franc. Or are participants in the market are able to take more riskier objectives? Are they able to go into assets which have more of a risk scenario, so a risk on measure, such as emerging market equities or equities as a whole? Yep. Okay. So the point of today's market analysis is to combine it with secondary indicators. On my previous session, I covered secondary indicators on the chart, but today's session, we're going to cover secondary indicators as an oscillator within a separate window. Yep. Key points I want to always mention at the beginning of any secondary indicator or indicator webinar is that, first of all, it's a secondary indicator. Secondary means that it is a reflection of price action. So that's another key point. It's a filter of price action. It's not giving us any other information or any different information to what we don't see already on the chart itself. So it's just a filter of what you're seeing. Yep. And a lot of these tools will have measures, for example, if I just show you on the chart itself. So it will be looking at each one of these candles. So we'll be looking at each one of these candles and seeing how much strength has there been or weakness there has been recently. Yep. To give you a better indication, let's go through the three. So today's topics will be the three major indicators used. They're the most popular secondary oscillators used within a separate window. There are, so RSI, which is also known as Relative Strength Index. That is going to give us more of an understanding of the momentum and strength of the market. And then we have stochastics, which is used mainly for ranging markets. And then we're going to go into ADX and DMI. ADX and DMI can be combined, and it's used for trend trading. So the ADX will give us more of a idea of whether we're in a trend or not. And the DMI gives us an understanding of who is in control. So let's start with the RSI. We want to see the strength in the market. Okay, so the first thing I'll do is add the indicator. To add the indicator, go to your indicator list, and you are looking for, under oscillators, relative strength index. The general settings are 14 periods, so that is looking at the last 14 candles and giving us a conclusion of where it is to the prior. So let's also give it some thickness, and let's change the color. Ooh, I've done none there. Let's try that again. There we go. So there you go, guys. This is our secondary indicator in a separate window. It's an oscillator, so it's oscillating between 0 and 100, guys. It oscillates between 0 and 100. So one thing I would say as a tip to add is add a horizontal line around the 50 level. And I'll tell you why in a second. So let's just go to this point here. And what I want to do is set it exactly to 50. So let's do that now. Okay, there we go. So there are 3 key levels to watch out for on this. One being, once you're above the 70, it is seen as overbought, meaning the market is expensive. When it gets below 30, it is seen as oversold, meaning the market is at a bargain price. It is cheap at that price. The 50 level is an interesting level. It is generally called a balanced line. So that is the medium of that price action, of that secondary indicator. Yep. So this is a median of a median tool showing us whether there is more buying pressure or more selling pressure. So price action, when it's above this 50 level, it generally tends to mean that there's more buyers in the market. If it's below the 50 level, it means there's more sellers in the market. Yep. And the idea is you need a number of confirmations to take a trade based on this. Yep. So let's go through it. The first thing you want to do is just look at price action itself. So price action itself should actually say to you, okay, this is what's going on with the market. So let's just scroll back. So let's ideally scroll where we're looking for a couple of key points here. Yep. First of all, let's go to, we are currently on the DAX. So let's go to the daily time frame. And what I want to do is I want to pick out a particular area. If I just remove this, it gives me a better indication of what's going on in the market. So we can go from this point onwards here. Okay, so we're looking at the bigger picture here, guys. We're on the daily time frame. We're looking at this significant uptrend that's taken place over here. And what we're going to do is read price action to see what has happened generally. Yep. So the first point to note is that, yeah, we can define that there is a trend. There is a significant trend such as this. This is our trend. Yep. The same, if we reflect that onto our oscillator, we can see previously that there was a downtrend. So this was a downtrend, this area here, that stayed below the 50 level. It stays below the 50, and it was in the oversold area, so the bargain area at this point here. Now, does that mean to buy? So generally what a lot of traders would do is buy in the bargain area and sell in the expensive area. So overbought is when you sell, and oversold is when you buy. But I like to use a number of confirmations to take a trade. So the first key point I would say is you need it to be in the overbought or oversold area. Once we're in this zone, then you can determine, okay, that price action and our RSI line is reflected, it's confluence, so there's confluence between price action and the RSI. They are both in the oversold zone, so they're both showing a significant sell-off. Yep. And I would have a trend line, so a trend line from these highs to this highs, something similar to this. So the first key point is we want it to be in the overbought, oversold zone. Yep. So that is our first indication of, okay, there is a potential trend reversal pending. Yep. As you can see, we're staying below this trend line. We are now in the overbought zone in this area here. So that is our overbought zone in this key area here. Yep. That is not our entry point though. Our entry point will be, okay, we're in the oversold zone. We then go back within the range. So when that's our second confirmation. Our first confirmation is being in the oversold zone. Our second confirmation is when we break through this trend line. So we break through a trend line on our secondary indicator. That is another confirmation there. In addition to that, once we break above this 50 level, that is our third confirmation. Yep. Same way, you'll be looking at your price action on this, having a trend line such as that. That will be your trend line on there. So you've got multiple touches. You got, as you can see, one touch there, second touch there, almost a third touch at this point here. Then you have that impending breakout, and it was tested from being resistance now into support, and another support level there. So our initial breakouts, if you compare them both in this zone here, is that on the RSI, it generally breaks out beforehand, then price action. So this can be seen as the leading indicator to take a trade. Yep, and this goes on to break beforehand to give you that early indication of a potential reversal. That is how you'd want to use it. And the aim is to use it in cooperation with other indications. Yep, so you need the first oversold signal. 2 will be back within the range and breaking through the trend line. The third will be back above the 50 level to show you that there's more buyers than sellers in the market. Yep. Okay, so that is one example of using the RSI, guys. Yep. And generally, if you're going through your RSI indicator, you could generally see that it stays mostly above the 50 level. So there are a few spikes below the 50 level. But how long did it stay below the 50 level? Very short period. Most of the time, you can see generally we are above the 50 level, showing that all the way through there's a more of an incentive for the buyers than there are for the sellers. Okay, so the RSI is a great tool to see whether there is continuation of strength in the market. Okay, so let's go to another chart, guys. Let's go to cable. So we're on cable. We've just seen DAX. We've seen the German 30. We're now on the cable chart. So we're looking at the FX market. Now we're going to look at another indicator. And this is mostly for ranging markets. Ideally, this should be used for ranging markets, which is the stochastics. I may have stochastics on. Here we go. Here we go, guys. I have stochastics already set up on the euro dollar. But again, you just go into your indicator list. And you will have stochastics, as you can see just over here, under oscillators. So please do use that indicator. And this is great for ranging markets. But it gives us two lines here. It gives us our actual stochastic line along with actual signal line. So it gives us a signal line that crosses over. Yep. Again, the same thing is reflected. It's between 0 and 100. It's an oscillator between 0 and 100. Your overbought is above 80. Your oversold is below 20. The idea is when it gets into that overbought or oversold zone, that is your first inclination of a potential trade, not to take your trade as soon as it gets to that overbought or oversold. So let's have a quick look through this chart. If I can define a couple of ranging market trades. So let's zoom into this area here. Okay. So specifically looking for some key levels. Okay, let's just go with this price action here. One thing I'll say, previously for the RSI, we've seen more of a trendline use. On this, you'll be using the support and resistance level a lot more. So let's put in our support level. That will be my support there. I'm looking at multiple touches and resistance level, potentially in this area here. So I can see that there's one zone just in this area here. And then we potentially have another resistance in that area there. Yep. And the idea on this is we're looking for a number of confirmations similar to all other indicators, especially secondary indicators. Okay, so we have our support and resistance levels in between. price action at the moment between 128.05 and 132.40. So from here, we're looking at how can we use our secondary indicator here. So the idea is when we're looking at overbought or oversold, so let's use my tool over here. So when we look at the overbought zone, such as this area here, I'm looking for the crossover to take place. So the crossover does take place there. So we have our crossover. Same time, price action is now in a bullish run. You see that bullish run, and that continues only up to these levels here. So test this level here. Yep. So it wasn't such a major bullish run. Yep. On the flip side, it didn't get to that overbought region for us to go short potentially there. Yep. So there's some weakness at this point. Yep. The next area that I'll be looking for is when we break through this. If we break through this level, there's a tail formed in this area here. So there's a tail there, and we start to see a reversal taking place in this zone over here. And at the same time, we have this down move, and then we have the cross above. You have that cross above, so back within the range. So the first key point is you want to be in the overbought, oversold. So right now we're in the oversold. The second is you want the crossover, so the crossover. And the third is you want to be back above this range, back within that range, back above the 20 level or below the 80 level. Once you're in that range, that is your potential entry. Again, you can place a trend line above these highs, something similar to this, and that will be your entry point again. Yep. And as you can see, this just continues, and it just shows you that it is driving the market higher, and that continues up to that point there. Yep. Also, look at trend lines. There's another trend at this point here, which goes on to break lower, retest, and then moves lower at this point here. I'll say the nicest signal that I've seen on this stochastic over here is when we have this extra indication that gives us such a good confirmation of a potential reversal, which is divergence. So if price over here continues to move lower as it has in this direction, but on the stochastic we see price moving in that direction, that is doing the opposite of what we'd expect it to do, right? So therefore that is seen as divergence. So when we break above, so we already got the crossovers. So the first is we're in the oversold. We have our crossover. We're back above and within that range. That's our third signal. And now we've seen some divergence, which gives us that additional information that there is a lot of weakness at these lows here. You could be looking to buy in this area here. So again, you'd have a downtrend line possibly, something similar to that. Downtrend line with a potential false breakout back within the lows again, and then another potential breakout. Yep. So ideally, you could also look to break above these previous highs here in this zone here. So that will be your entry point through this level here. And this continues on to hit this resistance level, which is also the previous high. Yep. So these previous highs. And that is how you would use your secondary stochastic indicator. Look for these confirmations, guys. These confirmations are extremely important. What I generally see in the markets is a lot of traders will use these secondary indicators but only look for one signal. Why look for one signal? Let me give you an example. If I generally look for around 4, so if I look for 4 indications such as this, so 1, 2, 3, and 4, if I have 4 indications such as this increases my probability of the trade. This increases that probability of the trade. You can even weigh it up in this way that, okay, each one of these signals is worth 25%. If you have all 4, that's 100%. Yep. Naturally, you know already that in trading there is no 100%, but for your secondary indicator of all the confirmations you can have, this could, all 4 of these signals can give you 100% confirmation that this signal is a very strong signal. Yep. If you have 2, that's 50%. But a lot of traders will just take one signal confirmation, it being in the oversold area, for example, and that's it. That's a 25% trade. Yep, so that's a 25% trade. So yeah, so ideally look to add in more confirmations. Yeah? So you're looking at being oversold or overbought, looking at the crossover between the two lines, the signal line over the stochastic line, and then you want to be back within the range. That's your third confirmation. You want potentially divergence, and these signals also give you divergence as we discussed about here. Yeah? So divergence, in addition to that, you can even use the 50 level within this indicator. Yep. Okay, so that is the stochastics. Now let's move on to our final indicator. So the stochastics, ideally try to use them ranges. Now let me give you a great tip here. If you use the RSI and the stochastics together, that filters out a lot of the bad trades. If you see them both in the overbought, oversold, and crossing back within the range with divergence, that is one of the best secondary indications you can have. Yep, so that is a great tip there, guys. Okay, so let's move on from there. Let me just delete all of these annotations. Our final one is going to show us whether the market's trending and who's in control, whether it's is it buyers or is it sellers. So let's bring in the indicator. So let's now go to indicator list. So we'll go to trend, and we're looking for this one here. So it's called Average Directional Movement Index. Let's just make sure it's got the correct colors there. So this is DI negative. DI negative is directional index, but it's a bearish directional index. This is a positive directional index. Let's go with a lime green there. Let's increase the thickness so we can see them clearly on the charts. And our ADX line, let's have that as that color there, along with a thicker line. There we go. So let's move to a higher time frame. So we're looking for those major trends. Yeah, so those longer term trends, but can be used in shorter term trends also. Okay. So let's go with, I'm looking for a potential setup as, let's have a look quickly through the 4-hour time frame. I'm going to look for a specific, I'm looking for that perfect entry point. Yep, so looking for a perfect potential signal of a trade. Okay, let's go somewhere around this area here. Okay, I don't need to do anything on price action. We're just going to use our indicator here. One thing I'm going to do is add a horizontal line to our indicator there. Okay, so let's place it above the 20 level. Okay. So what I'm looking to do is look at whether the market's trending or not. So this ADX line over here, the black line known as the ADX line, so average directional movement index. Yeah. This will determine whether the market is trending or not. But the only way it tells you whether it's trending or not is when it's facing upwards. So if it's facing upwards and it's moved above, and it's above the 20 level, that is showing us a trending market. Now, I've known people to use it at 20, at 25, or 30 level. So I'd say the range is between 20 and 30, depending on the asset you're looking at. You would naturally do a bit of back testing to see how often it works above the 20 or the 25 or the 30 level. But for this example, we use 20. So as soon as the ADX crosses above the 20 level and it continues to trend higher, that's showing us that the market's trending. But it doesn't tell us it's trending up or it's trending down. That is where we use the directional index, the DI plus and the DI minus, to give us the idea of who's in control, whether the bulls are in control or the bears are in control. So the bulls will be the green line, the bears will be the red line. So whichever one is above is the one that is in control. So if the green line is above the red line, that means the bulls are in control. If the red line is above the green line, then that means the bears are in control. So going forward, so we'll just go forward like this. You can see But at this point here, so we're looking at the most recent price action, what's taking place here, guys? What's taking place here? In this area here. So ADX line is below the 20 and it's facing down with a little bit of an uptick there. And we're seeing a lot of crossover taking place with the DI plus and the DI minus. Okay, let's continue. And we're waiting for that next potential setup. So I'm waiting for a breakout. Okay, there we go. So we have our first initial breakout to the top end. First initial breakout to the top end, but also at the same time, the negative DI is also above. So it's showing us that the bears are currently more in control. Another great tip to add to this is the spread between the two DIs, the plus and the minus DI. I require, a lot of traders will not only want the crossover between the two DIs, but also a spread between the two. You want that gap between the two. So nothing significant, no significant gap there. Let's continue. Again, we're back within the range. Okay, we avoided this trade. Let's continue. So it stays above, there we go. So now we see a strong bullish ADX line. Yep. So we don't know if it's bullish or bearish as of yet, but so far it's showing that it's bearish more than anything, but it's showing that there is a potential trend in play. Let's see if there is a wider spread for us to enter. Okay, nope. So it's back within the range, and there we go. Now we have more of a spread between the DI minus and the DI plus, with the ADX line above 20, came back to the 20, retested it, and now pointing up. Now at this point you could assume, okay, this could be a potential setup, and that is where you'd want to enter. So this is a great signal to look for, guys, which is looking for the spread between the two. So you want the spread between the two DI plus and the DI minus. This is showing you that the bulls are in control. Yep. As well as this is showing you that it's trending. Okay, so let's move back through, and that continues. Yep, so if I just delete all that, there we go, and that continues. So it continues to be bullish and continues further. Now you have the crossover between the two. Again, you may require a spread for a potential reversal. And yep, so that's the spread that takes place. So you've got the spread just there, and now it's showing us the opposite. So now we're seeing the uptick in the ADX line along with the negative DI taking control. So that's more the bears taking control and potentially a trend about to start at this point. What happens? Nope, back within the range, and now they're back below the 20. Again, we have that initial breakout. Now we've got a spread between the two. Positive is in control, and the ADX line is above, and that continues. There we go. There's a larger spread between the two. That could be your potential trade entry, and let's see what that happens. And that continues, and then we have the crossover again. So that's where you'd ideally take profit, or you could potentially wait for a larger spread between the two before you make your final decision. And yep, so that's it. So you have a larger spread, a lot of hesitation. The ADX line coming back to the 20 level, so we're still above 20, still trending, but it's pointing more down. There is more of a bearish tone taking place. Yep, and let's wait for that next confirmation, which could be potentially this. So ADX line facing up, a larger spread between the two, and that continues. Yep. Then we have that initial crossover, and now it flips to the other side. So using the ADX will definitely help you to figure out whether there is a trend in the asset you're looking at. A lot of people can just use the ADX line on its own, go through multiple charts and see which charts are trending, and then do rest of the analysis the way they want to do it. Yep. So they can use the ADX line just on its own to define a trend. But the positive for the DI lines, the plus and the minus, it allows you to view whether there is more of a trend in the market and who is in control. Yep. Okay, guys, just to reflect on what we've discussed today, guys, we've gone into secondary indicators covering covering three main types of popular secondary indicators that are placed on an oscillator below price action. It's in a separate window, below price action, and it's just a filter of price action. We've covered RSI to show us the momentum and the strength in the markets in that particular asset. We've looked at stochastics, which shows us gives us trading signals based on ranging markets and consolidations that take place. And then we've used ADX with DMI to give us to filter out whether the market's trending or not and who is in control, whether the buyers are in control or the sellers are in control. Okay guys, that's it from me. Hopefully you've enjoyed this webinar. Please do put in your comments at the end, and we will be doing more market analysis next week, so more focus on actually looking at different assets, going through what's the latest in the market, and maybe introducing one or two new indicators that you may use. But have a good one guys. Take care. Bye-bye.